Hello, everyone. Welcome back. Happy Friday. Hope you're all doing well. Let's make sure we got audio. All right, 45 in here. Got a good amount of you guys. Awesome. Should have a full house this morning. Ivan, hello, hello. Good morning to you, sir. Islam, good morning. Welcome back. Glad to be here. All right, guys, let's go ahead and get right into it. So let me see what I'll do with the picture here. Don't want to cover up the chart, so let me see if I can make myself a bit smaller here. We'll try that. And if it's a problem, I'll have to just move myself into the bottom right corner. But I think we should be good. If I do cover the charts, just let me know, guys. Alrighty. All right, let's get into it. Hope you guys are all doing fantastic. We had a lot of downside targets delivered, so we'll just start with NASDAQ, and we'll go into some tape reading here today, share what it is I'm looking for, walk you guys through the morning session, just like I'm doing on a daily basis anyway. Myself, team, already got paid today, gave them several price action clinics every single morning session. So I figured I would come on here and spread the love on YouTube with you guys. So with that being said, that's why we're here this morning. Let's sort out the business for the morning session. We'll take some questions, walk you guys through some things that I look for, how I frame setups, and we'll talk about the free course that'll be coming out here this afternoon or this evening, whenever my team and I decide is the best time. So with that being said, guys, let's go and get right into it. So daily chart here, we saw a huge drop down to the levels we were looking for, relative equal lows here, and this gap here that we were looking for as well. So we'll watch that. We traded down into it. Now, if you see here, we have relative equal lows here. But if you notice, before the market returned and retraced back higher, we dropped down and we hit 50% of the wick, right? So you can see we open, drop down, 50% of the wick, snapping back higher, pulling back into the range. So my bias for today, it's kind of 50-50, and it's not because we didn't know what the week is going to do. It's just because we've had a lot of downside targets already delivered. So we were expecting, this week, we were expecting a weekly bearish expansion. Once you already get a huge expansion into the targets you're looking for, probability starts to drop off, right? Because you've already seen a huge run. All your targets are delivered. So now what else is there for the market to do? Can it keep dropping? Sure. Can it retrace and pull back into the range? That's also a possibility. So the technician, once you have all your targets delivered, it just puts you in an interesting place where now you have to wait for more information and allow the market to show its hand in an obvious way. So let's drop down into the daily chart. I'll get into the review here. I'll review what we saw this week and how just lovely, beautiful price action when you know what you're doing. So we'll review that here at the end of the stream. So we'll watch this rectangle here, and which is this inefficiency that I'm anchoring it to, and then just want to take your attention to the turning point that happened inside that wick here, which we do talk about frequently, which if it's not going to get down to the low, that wick 50% usually will be the draw. So we dropped down, we left this low here relatively equal, and we just had the NFP release here about an hour ago. So let's drop down to our lower time frame here. It's a really nice sell-off here this week. All right, so we have these relative equal lows down here. So from like a higher time frame perspective, I still favor this, the draw liquidity. So let's work down to our 15. So what I wanted to see off the open is if they wanted to run this thing higher first, and then see if they wanted to bump the highs here, and then potentially the highs here, then roll over. Keep in mind, if the market is bearish, it doesn't need to do that. That's just something I would prefer to look for, because in my mind, that would make a higher probability price run to the downside. But pulling up S&P here side by side, we have NASDAQ on the left, ES on the right. Looks like S&P showing strength. So if S&P is going to rally, then you want to put your attention on the high here. And that'll bring NASDAQ up with it, by the way. And then this high here. So you see these highs are relatively equal. That's easy bait for them to want to smoke them. There you go. Now above that, what's the next liquidity pool you encounter above the retail resistance? You have this high here. And by the way, if you want to learn about retail resistance and how to see setups like this, meaning the market's going to run up into highs, that'll also be taught in my free course. It's very basic stuff, but you do have to know what you're doing. Basic stuff in the sense that the market's going to gun for the uninformed money, and that's going to be above these relative equal highs, right? Because they see a high, another high. Oh my gosh, wow, this thing's super bearish, right? Rolls over, and then runs to first stage of liquidity, and then the second one I just gave you here, and I told you that would also drag NASDAQ up with it. So looking at NASDAQ here, it has the respective high here, which it hasn't taken out yet, but it's within an earshot of it. And then we have this high up here. So these highs here, relative equal. Again, more retail bait, right? So now we got the business sorted out here on the 15-minute chart. We'll drop down into the 1 minute. And this is very important to understand. Before you even drop down into your 1 minute charts, you have to have your higher time frame framed in the sense of what you're looking for, where the liquidity is, and where it's likely to draw to. Because now we're going to drop into the 1 minute chart, but we know what we're doing, right? We know that the market is likely to reprice higher for the highs here. Same thing with NASDAQ, and same thing with the mini S&P. But the problem is if you just drop down into your 1 minute chart, right, and this is all you're seeing here, then you're missing a lot of insight. So that's why you always want to start from at least a 15, I mean, really you want to start from a daily and an hourly chart, but at a minimum you want that 15-minute perspective because that's going to give you the liquidity that the market's going to seek. So let's drop down our 1 minute chart and get this thing sorted out here. So we're seeing a lot of strength in dollar right now. That's also weakness in dollar rather. Let me pull up the DXY. So that weakness in dollar should lend well to bullishness for the indices, at least in the short term. So this week we saw strength in dollar rallying higher into this gap here, right? But now it's starting to retrace, pull back into the range a little bit. So we'll watch this down close candle here, see how it wants to use that. But just look at the intraday weakness that we're seeing. So you'll see the dollar, right, is weak intraday. So we'll see if that lends to bullishness in the indices, which is, at least as of right now, what I'm expecting. All right, so we're dropping down into this fair value gap here. Keep in mind, they left these highs here relative equal. So this high here is still relative equal to this one back here. So in my mind, that's still unfinished business above these highs. So if I'm suspecting it's going to be unfinished business and it wants to trade up into that, then I'm going to look at the fair value gap that it's trading into and expect it to accumulate long positions there, right? And then expect that to send it higher. And it's even further solidified with the bullish breaker. So find that highest up close candle, that would be this one here, extend that through. So I would want to see this here act as a barrier on price if it's going to get up into the buy stops here. And let me pull up my trading template here. So not a trade idea. Don't bet the farm on this. Just what I'm watching right now. These highs here are a little too clean in my mind. And then let's look at this thing on regular trading hours here. All right. So now if we look at regular trading hours, now you can see these highs are super obvious here. So very obvious strong liquidity here. So let's drop down to our 1 minute chart. Looking at the 5 minute chart, we're actually drop down into the 1 minute. Looking at this 5 minute candle, you see how it opened, dropped down. If I'm bullish, I'm seeing this as power of three, right? Open, drop down, price in the low, and then I want to see this thing expand higher above its opening price and give a blue up close candle. So I'm watching that power of three on all time frames. Let's go to the electronic trading. All right, so we dropped down. We hit the breaker and the fair value gap. So far, the bodies are staying above it, which is good. Wicks trading down through it a little bit. That's fine, though. But you see the bodies are staying above it. That's good. And they should cook these highs here on this very candle. I like how this wick here, we open on this candle, drop down into it, staying in the upper half. That's bullish. It need to get up and go from here. Happy Friday, man. Looks like they hit TGIF. Yes, sir. I haven't measured the weekly range, but looks like, yeah, this probably would be a 20-30% retracement. Huh? Yeah, I'm not too worried about TGIF. At least at the moment. We already know who's in the crosshairs, and it's buy side here. All right, smoked. Off that wick, 50%. Breaker, fair value gap, price run to liquidity. If you guys remember, this is stuff I do in my group live every single week, but I know this might be a new experience for some of you guys. You see how this 5 minute candle when it's a black down close candle, I'm telling you guys, look, it's just creating the wick. The reason it's doing that is because it's dropping down below that opening price into this breaker here on the 5-minute chart. Which if you don't know what breakers are, again, you also learned that in my free course, so you know what you're doing on the charts. We open, we drop down. So this is a black down close candle. I'm telling you guys, look, it's just power of 3. It's open low, high, close, and expand. So when you see that, that's when I'm taking entries. I'm trying to take entries in the wicks of these higher time frame candles. So if I was trading today, which I'm not, I'm just here putting on a price action clinic for you guys. I can do this shit every day. I don't need to worry about trading today. Market drop down into the fair value gap and breaker, I would be buying in here. And then I would be watching this wick here. Opens, drops down, does it stay in the upper half? Yes, and it does what? It turns on a dime inside that fair value gap. I took your attention. You see how it stops perfectly there? That's telling me what? It's going to trade up there in 1 or 2 candles immediately. And these aren't small little moves. I think with the ranges we're seeing, 40, 50 handles, right? Beats a day job. So there's the breaker block here, low, lower low. So once you have the rate on liquidity, find the highest up close candle, extend that through, and then you can have the obvious equal highs here. But again, it's not, don't get caught up thinking, oh, it's the breaker pattern that makes this effective. The breaker pattern's great, right? Don't get me wrong. When you have a low run on liquidity and you know where the market's going, it's absolutely lethal. And then you can get in here and buy these down close candles. When you see me executing, I'm buying down close candles, or I'm buying when the market's dropping. And this is exactly what I'm doing. But the ingredient is I have to have the draw liquidity. Because if I don't know where the market's drawing to, you're fucked looking for an entry, right? So I talked about that the market would want to expand higher. Because on regular trading hours, RTH here, what do you have? This high here, and it's relatively equal to this here. And then once they left those highs relative equal, they pulled it down. What that's doing is that's engineering more retail victims, right? Because they see this as resistance. Wow, resistance again. Wow, now it's dropping. Man, this is good, right? Go short. And then it rips their face off. But when you know what you're looking for, you can be the predator in the markets, essentially. And that's really the big difference between retail Rick, who's in here losing his ass every week, and smart money, who's in here picking these motherfuckers apart. So hopefully that makes sense to you guys. But the logic around the entries is secondary to the draw. Meaning, once I know where it's going, entries are easy as shit. Buy a fair value gap, buy a breaker, buy anything. Buy a down close candle, it doesn't matter. So if we accelerate above this high here, my next point of interest would be this high back here. And then if we really run through that, then I would have to consider gap closure of this gap here. So from where so this is Wednesday's opening range gap. Thursday's opening range gap. Sorry. So you see this gap here, right? We filled a good amount of it on Thursday. But if we see animation above this high and it wants to keep running higher, then my attention will jump to this portion here, where you see it's unfilled. That would be like my next draw if order flow remains bullish. And I'm also not telling you to go long here either. This is not a good long. This is where retail goes long. Again, you're going to learn all that in my free course. Retail buys above highs. So retail wants to buy above the highs. The difference and the huge paradigm shift in retail and smart money is we are predicting the run into the highs. Retail's reacting after the fact. Big difference, right? So if you've worked with anybody who knows what they're doing, you understand that buying above old highs is the worst thing you can do. Look at that. So you buy anticipating the run into the highs, and then you scale off profit. For me, if I was long, stop would be a break even here, and I would already have profits. So profits would be scaled out, and the stop would be rolled to break even. So if it does knock me out, that's fine. Got paid. That's how I'd manage this setup here, because it is still that first run at 9:30. So this could be a suspect run, and then fade it and drop later in the session. But you can see the power of these relative equal highs here, and here. It just gives you easy draw liquidity. So I love it. And when I'm analyzing and I'm in technician mode, I love seeing a draw liquidity I'm looking for, like here. And I love seeing them create a swing high just short of it and pull it away from it. Because I know that's just going to offer a discount market in the sense that it's trading into this fair value gap here. And it's just going to continue higher. So it's really easy to see those types of price runs there. So you can see, I was getting quite a few questions on TGIF. Is it going to happen? Is it not? I don't know, right? But I do know liquidity will be attacked. Every single day at 9:30, this thing will gun for highs and lows. And if you understand the logic it's going to use to get there, then you have an infinite supply of setups, right? Every time we sit down live for the AM session, we don't run out of price runs, do we? All right, so let's go up to a 5-minute chart. I'm trying to see if they want to take this thing higher on the day. Like I said, in terms of my higher time frame buys, it's not as clear right now because we already had a huge drop on the week. We pulled back into the range. So we did what's already reasonable. We've delivered what's already reasonable for a weekly power of 3. Open high, low, and then close off that low. So it's tough for me to say like a higher time frame direction where we're likely to go. But obviously I can still go in here on these lower time frames and sort it out. All right, so we're watching on the 5-minute chart here. If we can sustain above these highs here, let's go back to regular trading hours. If we can sustain above this high here, then this buy side here and then this gap closure here is of interest for me. Yeah, S&P is super bullish, so we'll go over back to ES here. Yeah, it's got up in all those highs. So the relative equal highs I initially gave you on S&P, toasted those, and then the high back here toasted that, and then you have to keep looking left. What do you have? Well, there's no liquidity, right? So it's the inefficiency. It's driving up and out. And then for those of you guys that work with me directly, you guys already know what you're doing with this level. You're grading it, you're measuring it, and you're watching order flow on each candle. And it's going to tell you if it's going to keep trading higher. If we do get above this gap here, then you have to focus on the highs up here. Okay, so let's go back to NASDAQ. All right, so we're sustaining the run above this high here. So next draw would be this high from Thursday morning session high. And then through that, we have to look at this gap here that's left unfilled. So we'll drop down to our 1-minute chart here. So what I was watching on this drop here was how we trade inside this down close candle. When institutional order flows bullish, down close candles support price. I feel like I say the same things a lot. So for those guys that have been with me for a while, and Sky repeats the same things. That's good, right? There should be continuity. It should be the same thing every time you sit down at the charts. If it's changing, if it's different all the time, then you're going to have retail results because retail's never doing anything consistently, right? They're always doing something different. They're always changing things up. And that's why there's no consistency to speak of. So you, in fact, want it to be consistent. You want what you're looking for to be very repeatable. So we dropped down, we dug into this down close candle here. We use it as support, we're rallying. The next draw is the 24.960s. I'll tell you one of the other things that makes this analysis even stronger. It's this gap down here. That's a breakaway gap. Whenever I see that, and I know what I'm looking for in terms of a directional bias, I love to see this here. So this gap here was the tradable fair value gap here. This is the one you would have entered long on because it also has that breaker, right? So fair value gap breaker, this is your long here, right? But this one is a breakaway gap in our analysis. You don't want to see this one fail. And if it fails to fill this gap here, then that's telling you it's really bullish, it's really strong. If you were long anything here, as it's running out old highs, you want to be scaling off profit because there is no guarantee it has to get here. So again, don't be betting the farm on my commentary here today, please. And if you are, manage it responsibly. Since we're trading by the highs, scale out. Yeah, dollar's just cratering right here. So I want to talk a little bit about why the indices are seeing strength intraday. And if you look at the dollar, it's just absolutely dumping. So we're looking at a 1-minute chart for US dollar, selling off. So one of the things I'm looking for, I'm always watching dollar here on one of my other monitors, watching this gap here. And we'll make that blue since it's support here. All right, so we drop down into it. Like how the bodies are staying at the high, that's good. And the next draw is 94.60s. Yeah, going back to dollar. Why is the stock indices ripping? You have to consider intermarket analysis. So the same thing I'm doing with you guys on Sundays. On the higher time frame, I'm doing the same thing on the lower time frame. So if I'm long or I'm looking for higher prices in the indices, like here, then I want to see what? A sell-off in dollar. Because it'll support that run. So the weakness in dollar is just further confirmation that the bullishness in indices is going to be money. All right, so let me take off dollar here. All right, so this 1 minute candle, open, dropping down, hitting this down close here. Want to see it be a power of 3, open low, high, close near the high. All right, so already dug into this down close candle here on this one, so it should run up on this candle here. Yeah, if we power up through the 60s, the next row would be the 80s and the 2500s. Yeah, so a little aggressive wick lower here, but it's just dropping down into this fair value gap here. So still staying supported here. Tony's gold, Bitcoin, and Ethereum looking quite interesting. Please take a look and analyze. Thanks. Yeah, absolutely. If you are not in our free Discord, you've been missing out on the winning lottery numbers on every market. So I will do analysis here for you guys on the live streams and whatnot. But if you want updated day-to-day analysis and the winning lottery numbers, I'm telling you, silver, Bitcoin, gold, stocks, dollar, Forex, all of it being sorted out for free in our free Discord. So you can go and check that out there as well if you want my most updated, my most recent analysis. We've been absolutely smoking these markets, right? So while the fundamental guys are coming with yesterday's news, right, telling you what's already happened and why it's happening, we're here predicting it ahead of time, right? Which is where the money's actually made. So very important to understand that you need actionable information, and the actionable information is talking about things before they happen, not oh yeah, Monday morning quarterback explaining everything the market did. Yeah, that's real helpful, right? All right, so this gap here is still supporting price. I'm not a big fan of how they came into it once, twice, and then a third time here. So a little sloppy for my liking, but it doesn't change anything here. Buy side still in the crosshairs. All right. High smoked off that fair value gap there. It's another little 30, 40 point run. Nice little grocery getter trade there. Going back to regular trading here. Showing you guys the details, the behind the curtains. Now we have to concern ourselves with the unfilled portion of this gap here. Right. So the liquidity here, first target, second target, and then I would see if they want to close in that gap here. Yeah, brother, we'll go and look at the other markets after. Right now we're putting on a clinic here with the indices. No need to distract ourselves here. All right, so I talked about the 80s here. 80s would be another level of interest. That's an old new week opening gap. And then if we really run higher, then we have the 25. It's 25. Okay. So we can get up into the 25 evens if we stay bullish here. So from like a stop management perspective, right, you would take a partial at this high here, take a partial at this high here. Or as we're running out old highs, as we take out this high, or as this high here, as we take out this high, you get partial at all those levels. And you'd want to roll the stop. So if I was long from anywhere down here, I'd roll the stop to probably this gap low here, because I wouldn't want to see it come back down into that. If it's bullish, it has to stay bullish from here. Zor, Dylan, do you have any videos on daily bias and intraday bias? Excellent question, sir. I'm giving that right here. So one of the really cool things is once you learn how to read price action on one time frame, right, it'll unlock on all time frames. Meaning the same thing I'm doing here on a 1 minute chart candle by candle, explaining every single candle, how it should behave, where it should form, when it should expand, where it should turn from. That's the skill set you need. Because once you have that, you'll do the same thing on a monthly chart, a weekly chart, and a daily chart. So it's amazing once you know how to read the price action. The time frame is irrelevant. So really, we're learning daily bias right now. Because if there's equal highs on the daily chart, like we have here in this example, so let me pull this up here. What the heck? It's like my feed's glitching. What is going on here? You guys seeing this? What is going on? I put on electronic trading, all my data disappeared. Market makers are like, man, this guy's too good. Let's fuck with this guy. All right, let me see what I can do here. All right, there we go. All right. So it doesn't matter if it's a daily chart or a weekly chart, right? Fuck the 5-minute chart. Forget this is a 5-minute chart, right? We have relative equal highs here and here. We have this high here. We have an inefficiency here. So that's your daily bias. Now with that daily bias, what are you looking for? You're looking for open low, high close, open low, high close, open low, high close, and you're looking for power of 3 bullish. So now what you do with that information is you'll drop into a 1-minute chart, and then you'll look to time your entries with that information. So that same logic applies to a weekly and a daily chart. It's the same thing. It's where's the market going, and then it's understanding the timing elements on the time frames that you're operating on. So if you have a draw on the daily chart, which in this case, the market only moves for 2 things, liquidity and efficiency, which again will all be taught in my free beginner course, the basics that you guys need. And then once you understand where it's drawing to, which in this case we covered liquidity and efficiency, then you just map out your PD arrays, right? Every gap, every down close candle will support price into your target. So what's that? There's your bullish bias. There's how you know to trust that bias will continue. And you use the same logic that one would use here on any time frame, because it's just reading price. At the end of the day, price is price. It's kind of like when you learn how to read a language, right? It's not like the language is changing when you're reading a newspaper versus when you're reading a book, right? It's the same language, it's just in a different place. Well, that's the same thing with like a weekly and a 5-second chart. A 5-second chart's doing the same thing a weekly chart's doing. You're just looking at it through a different perspective, right? It's just going to give you more candles. But the logic is the same. So my advice to you guys that want to learn weekly, daily bias, just learn how to read price. Because once you understand price action, it's the same thing on every time frame. I'm not doing anything different when I'm calling monthly charts, weekly charts, daily charts. It's all the same thing. All right, so let me see what's going on here in my charts. That little random turning point at that high we were looking at. What's going on here? All right, there we go. I'm not going to switch it off. For some reason, this thing is, I don't know what the hell's going on here. You guys see all this data missing? Is that crazy or what? Let me go to the continuous contract, see if that fixes it. All right, so continuous contracts at least displaying the data correctly. So they pump this thing higher at 9:30 until you can see the obvious liquidity here, the obvious liquidity here. Now, why is this liquidity important? Because anyone that's been fortunate enough to be short this week, right, they're trailing their stop. Where are they going to trail that stop to? This high here and this high here. See that? So they're going to trail that buy stop right down to these highs here. Why these highs? Because it's the obvious highs after the most recent drop. So retail that's short, that has any open profit, they're going to trail their stop here and here. So you have to look at the market. What's maximum pain for retail? Driving it higher into these stops. And then you can see that's, let me go back to the other contract, see if it's cooperating now. There we go. All right. And then you can see they drove it up into that high there and then into that unfilled portion of the gap, and you can see strong rejection. So now this puts bullishness on the back burner, right? Because we've done what now? We traded into targets, very important, and then we traded down through this inefficiency here. When institutional order flow is bullish, every gap and every down close candle supported price, right? Here, support, here it drops down into it, support, here it hits it, support, here it drops down to the down close candle, support, and rallies. As soon as you see that not happening, in the sense of this like fair value gap here, being closed below, that's your first warning sign that it could be, right, problematic to see higher prices. So this is why you take partials, right? Scale out here, and then as it's driving to that gap, you would scale out. And if you look, we made the high right at that 980 level we were looking for. Yeah, which was just right there at a old new week opening gap that I was looking at. All right, so here's what I'm watching now. If we stay below this gap here, opening range gap becomes my next level of interest here. So let me see. I don't know. Okay, so you see this opening range gap here? I'm going to take off this level here. And we'll do the quadrants. That's cool. Open to close. Okay. So this gap here, violated, right? That's a no-no. That's no bueno. That's no good for higher prices. This is how you be flexible. This is how you get in sync with what the market's going. So in terms of your question, as it relates to like intraday bias changes, right? Initially, we were bullish into the highs. But now, as soon as we trade to this fair value gap, I'm no longer bullish. I don't want to be long when I see something like this, right? And now I'm switching gears. So we're watching this gap here. Let's not make that blue because it's not like support. Usually like blue PD arrays are support. Red usually is like a bearish PD array for me. So as long as we stay in the lower half of this gap here like we're doing, then my first target would be the sell side here, right? So anyone that's still long, that's holding the bag, where's their sell stop going to be? Right here, right? And then if it drives through that energetically, then I'll see if they want to take it down into this opening range gap here. But so far, everything is weak now. Esam was about to tell you to click Command R if you're using Mac OS to refresh the app. Yeah, that would probably be very helpful. Should be good now, though. Good to know. I'm looking at the other averages here. We're kind of seeing a decoupling. So I still like NASDAQ into the low here and into possibly the opening range gap. But here's what I'm considering right now. We have a decoupling going on, meaning the NASDAQ is weak. But look at the Dow, it's rallying. So I'm not giving you like two side bullshit, like, oh, I'm bullish and bearish. I'm giving you one side. So I favor these lows on NASDAQ, but I'm telling you what's problematic in my analysis. I do not like to see the Dow rally. I prefer to see symmetry, meaning Dow dropping, S&P dropping, and the Dow dropping as well, right? Moving in tandem. When they're not moving in tandem, it just adds a bit more difficulty to the mix, to the equation. So doesn't mean it's impossible, just something I don't prefer to see. So what I'd like to see is for the market to start to get back in sync. So if we can see the Dow start to roll over or ES start to roll over, then that'll really allow NASDAQ to drop. But based off everything we're seeing here, everything is weak in NASDAQ for the moment. So we talked about sell side here. And S&P is just kind of hanging out in the middle there. So there's that sell side off this fair value gap. There's another little easy grocery getter trade, another 60 points. Some of you guys don't believe me when I tell you you can do this shit all day long, up and down. But the key is you need the market moving, right? So you guys can see the market is much better February than January, right? Because, I mean, man, you can just dog this market up and down, just rip it apart when you really know what you're doing. But obviously, the market has to be cooperating. Why do I like this price run here? Well, I like how we trade into the gap. We left the lower half open. And what did I just teach you guys? On this price run here, what I have had a breakaway gap here behind me. But look at this gap here and this gap here. What's that in my analysis? That's a breakaway gap. That's why I wanted to see it stay in this one here. Because now that's going to tell me we're going to have a fast run down to this low. And I think, you know, traveling, 80 handles and I think 4 1-minute candles, I think we can all agree that's pretty, nothing spectacular, but nice run, right? But that's on the basis of this here. We took out buy side liquidity. This is like a 930. I'm looking at this as like the 930 Judas. Broke down, left gap open. This gap here traded up into it, stayed in the lower half. That's weak. And why this low here? Well, because anyone that's long off the open, where's their stop going to be? Below this low. And they didn't know to take profit here. So they were holding the bag and now they're stopped out. Now we want to see, do we accelerate below this low here and trade down into the opening range gap, which is what I'm favoring here. So how would I manage this trade? Well, if I was short off the gap here, partial would be taken here, and then I just roll the stop to break even because I wouldn't want to see it roll back up over top of this drop, and I definitely wouldn't want to see it trade through this up close candle. So this up close candle should never be violated in my analysis. So if I took an entry here inside that gap and I initially had like the stop up here, then that stop would get rolled down to this high, or this up close candle's high. Because you would never want to see it trade all the way back up through that if it's going to drive down into the opening range gap. It's bugged for me too. Yeah. The continuous contract kind of helped smooth it out, but it's all good. Yeah, mine's also glitching. Yeah, it looks like we're all good now. Yeah, good question. So with S&P dropping, why do you care about the Dow? Yeah, excellent question. The averages, I'm looking at all of them. So I ideally want to see all the averages moving in tandem because it's going to make for easy low resistance liquidity run. And if you see here, S&P, it's dropping, right? But just not as much as it could if the Dow was also dropping as well. It's just something I prefer to see because what you'll generally see if you see NASDAQ dropping into targets, which we're looking for here, and you have the Dow rallying, generally what will happen is S&P will just consolidate in the middle and it'll be held while NASDAQ's dropping, Dow's rallying. So usually when you see that decoupling, the S&P gets real sloppy. But as you said, right now it's not. It's actually dropping, so that's why we're seeing a nice drop in NASDAQ here because we have the S&P confirming it. All right, so what I'm watching, this candle is we're trading higher up into these two wicks, this wick here, this wick here. I'd like to see this act as a barrier on price. This should act as like a balanced price range. And you wouldn't want to see it get back above that. All right, so the farthest this thing could go and still be weak in my mind would be this up close candle here. That's why the stop would have to be above it because it can retrace. Right, we just took out a measure of liquidity so it can pull back into the range. External, internal, internal back to external, which you'll also learn more about in my free course if you're interested. Put a lot of work into it over the last couple weeks here with the team. I wanted to give everyone a good starting point, good foundation, because a lot of people come to me that I work with and they don't have the foundation. They just don't have a lot of the basics that traders need to be profitable. And I was like, you know what? Let's change that. Let's give people the right starting point, give them a good foundation so they know what to focus on, how to do this the right way. Because there's absolutely a right way and a wrong way to learn how to trade. And the hard way is tough, very tough. All right, so I like how this 1005 wick here. See how we didn't get up the upper half? That's good. We didn't even try to fill it at all. That's weak. So that should be just a straight shot lower right into the 930 opening price and into potentially the midpoint here. All right, so the 930 opening price here should deliver it. Come on, it's a little bit more. There we go. So from the fair value gap here down to the 930 opening price, that's another 120 points. That's a lot more in a little grocery getter. And that would be another partial level for you right here. So you partial at the low, partial at the opening range gap high. And then I see, do they want to run out? Now the next sell side becomes this level here. Right? So a retail Rick is long, has a stop down here. But here's the important thing. You don't need this level to get paid. From here to here, smokes a combine or a challenge or whatever it's called, absolutely delivers payouts. And you don't even need the full run down to this level here. Right? So that's why I'm a big advocate of taking partials because it might not get down here, but you're in a beautiful trade. So why aren't you going to pay yourself? Eslam, with the run on sell side liquidity first, some markets following your command. Yes. Yeah, we do this every day, brother. Every day like clockwork. With the run on sell side liquidity first at the beginning of session, is that not considered the Judas swing? Yeah, it's a good question. There's just other things you got to understand, brother. Like, there's other things you got to understand for it to really make sense. The big thing with the Judas swing is the Judas swing moves against the higher time frame direction. I'll be right back. Let me get some coffee and then I'll come back and I'll explain Judas swings to you guys. So apparently we are out. We need to make some more. Dylan, you walked away. You need to get the NASDAQ back under control. It's retracing. All right. Okay, how do you know when your bias is wrong? You lose money. Excellent. So with the run on sell side liquidity first at the beginning of the session, does that not consider Judas swing? Yeah, I know what you're asking. Good question. So here's the thing with Judas swings, right? There's suckers plays and they're Judas swings. The biggest thing to understand with the Judas swing is the Judas swing moves against the daily range, right? So if my daily bias is bearish or my weekly bias is bearish, the Judas swing will be bullish, right? So it's going to be a Judas swing higher. So the Judas swing, or the manipulation of the day of the session, is going to be against the higher time frame direction, right? So an example of that is if we look at the daily chart here, and we look at the last 3 trading days, which we've had a bearish bias. And if you don't believe me, well, you can just go to the Discord and see where it's called out. I know there's a lot of goobers in the industry, so if you guys want to see the real deal, you guys can go check that out. So looking at this here, right, let me explain Judas swings. It's the same thing. So whether you're using the midnight opening price, 9:30 opening price, and you're trying to gauge what the Judas swing is, or even the 8:30 opening price, it's all dependent on your higher time frame draw, right? So looking at this here, there's a bearish bias. So before we even go into the lower time frames, look at the wick here. Let me zoom in here for you guys. Look at the wicks that are created above the opening, above the opening, above the opening. Now, this isn't the midnight opening prices, the daily candle opening price, which I think on TradingView at 6 o'clock. So this isn't technically the midnight opening for the Judas swing, but it still communicates the lesson. The Judas swing is the run above the opening. So this is the Judas swing higher. This is the Judas swing higher. This is the Judas swing higher. Why is it a Judas? It's the Judas goat leading them to the slaughterhouse. Why is it leading them to the slaughterhouse? We've been bearish NASDAQ all week. So they send it higher at the beginning of the candle, or at the opening price. They'll send it higher first to then sell it off. Now today, because I don't have a clear daily bias as to really where this thing's going to go, I mean, it doesn't mean we can't sort out price runs and make bank. It just means I don't know where this thing's going to go on a longer term time horizon. I don't know where this daily candle is going to close. But as you see, you don't really need to know that to get paid consistently. So when I'm framing a Judas swing, generally I want to know the direction. Like, is this thing bullish or bearish? Then once I have that direction framed, then I can go in and classify price swings as a Judas swing or not. So hopefully that makes sense. So let's say, playing devil's advocate, I'm not saying this is the case, but let's say we're going to drop 200 points on the day, right? Let's say NASDAQ wants to get all the way down to these lows down here, which shit, that'd be a lot more than 200 points. Let me see. Yeah, so yeah, I'm not making the case we're going to drop 600 points, but let's just play devil's advocate. Let's say the market's going to drop a lot more today, right? And we're going to see a bearish day on 9:30. Then I would be able to classify that as like, okay, this is a fake run higher, setting it into a premium market, stopping out shorts that are already in, allowing smart money to overtake that position, and also putting in retail long, right? Putting them long on the breakout here. And if it's going to be bearish, then I would look at that within that context. So Judas swings are very contextual because you have to understand where's the market going and is it going to be a bullish or a bearish session. If it's going to be a bearish session, then the run against that bearishness will be the Judas swing. So the key with the Judas swing is understanding where the market's going. Then it's really easy to frame these price swings and what it should do, why it should do it, and whatnot. So let's go back to regular trading hours so you guys can see the gap here. So we talked about how if you were short, right, partial here, partial at the 9:30 opening price, and the stop would be where? Above this up close candle. Why is that? Because that's a bearish order block. So you see we trade up into it, we hit the order block here, right, and it rolls over. So if the stop's up here, might have got closed, right? If you have a back test and you don't trust it, might feel a little scary, but it doesn't take out the high because it shouldn't. Because it had a partial entry into this gap here and it couldn't get 50% of it, this up close candle becomes a bearish order block. See, there's logic there. Comes up, hits it, sells off. So it looks like they really want opening range gap here. Yeah, so hopefully that makes sense to some in terms of categorizing the price swing to the Judas swing. I get that question a lot. So sort of, how do you know when your bias is wrong? Yeah, so obviously the answer I gave you, you lose money, right? And you realize you're wrong. But a lot of it comes down to order flow, right? Like for example, let's say, I don't know, let's say I was, what's a good example? Let's say I was bullish on the day, right? Let's say I'm bullish and I'm thinking there's a drawn liquidity up here, right? And I'm thinking, all right, NASDAQ is going to get to 25,100. Okay. Well, initially it starts off good. It's bullish order flow, easy, painting, bullish order flow, all the way higher. As soon as I get a breakdown through the PD arrays, right, like this fair value gap here, this down close candle here, and this wick, we now have 3 key levels that have been broken to the downside. So if I'm bullish, I have to put that on the back burner because it's telling me, look, I'm not going higher anymore. So then I immediately switched from bullishness to you guys to bearishness, told you this gap here would be a short, sell side here, 9:30 opening price. Now we're looking for the remainder of the gap. So looking at your bias, it's going to change based off the information you're given. So I can be bullish and bearish. I can buy and sell all in the same session and all have profitable transactions. And I can also lose doing that as well, right? Don't get me wrong. But that's how you change your bias, right? You have to understand institutional order flow. And you have to understand when it's communicating to you that, hey, look, I'm not bullish anymore. And this thing is clearly not bullish at all. It's extremely bearish based off what we talked about here. So a lot of bias comes down to understanding your order flow and then it's confirming it. So if I was bullish, but then I see this here, then that's telling me not to be bullish. So I'll change my bias and get in sync with what the market's actually showing, which is lower prices. And it gave that 100-point run down to the 9:30 open. So that's a little bit on how you adapt, switch your bias to what you're looking for. So now it should really accelerate. This low here, you want to really see it run through that low. Like you don't want to see it hit it, pull back up into the range. You just want to see it completely eviscerate that low and make a run for this low down here. It already retraced, hit the bearish order block, bump the stops above this high. This gap here, preferably. Doesn't have to. But I'd ideally like to see some of this gap here left open. But this here, training yourself, for those of you guys that work with me, this would be like another partial for you, right? So if you're short, low, we made a lower low here, that would be another partial for you. Looks like maybe we'll raid sell side on NQ, form an SMT. We'll wait for that to go long today if we can even get that at all. Yeah, possibly, yeah. From a higher time frame perspective, not sure really where they're going to take this thing, other than just the intermediate price swings. Because we're late in the week. It's NFP. The U.S. just issued notice yesterday evening, that all Americans should get the hell out of Iran. So that'll be very interesting. So I think there's a lot of interesting things right now that the market's having to weigh out. So we'll see what that means over the weekend here. Super Bowl Sunday. WSMT. Which SMT are you talking about? Let's see, because there's crazy SMT with the Dow right now. And you can see the S&P is just trash, sloppy market in here. Sure, off that fair value gap, it gave a run, right? Nice little price run into that fair value gap here. But just really sloppy, a lot of back and forth here. And the reason you're seeing that is because of the decoupling aspect. Let me go to the Dow. You see the Dow is just ripping higher. So this is making it difficult for NASDAQ to really fall out of bed. So to answer your question, Why do you want to see Dow move in sync? Because when I'm trading, right, I would want this thing to already be a half gap. And then I'd already want it to be trying to close in the full gap and run for this low down here. But because it's decoupled, it's not delivering in a low resistance liquidity run. Again, it doesn't mean we're lost on the price action. It just means you have to manage your expectations. All right, so if I have any stop above this high here, I'd roll it down to this high here. And that would be like better than break even. So I would not allow this trade to turn into a loser. Reason being, we already dropped into a discount. We hit 930 open. We swept the stops one more. And then I told you guys we had to accelerate below this low. We didn't. I would kill the trade here. I would not want to be short anymore. I shorted S&P off that. Oh, nice. Nice. Yeah, S&P gave a nice little run. And with the volatility we're seeing now, I mean, shit, let me see. Yeah, 15 points, man. 15 points in S&P. That's good eating. Samad paid. Beautifully done, sir. Love to see it. Yeah, so obviously that's not, yeah, to your point, the markets aren't going to be so black and white. It's like, okay, if it's going to be a bearish day, every single day is from the open, it's immediately going to run higher first. The reason you'll many times see that is because if they're going to take it lower on the day, they'll drop it first. That's not a Judas swing. That's just suckering in people short early, right? Then they'll take it higher. So let's go to electronic trading. Let me kind of walk you through what's happening here. So there's traders that want to be short this market, right? They may think it's going lower. So what they'll do at 9:30 is they'll drop it here. Now, this can be a form of manipulation, but I wouldn't look at it as, well, and it, again, depends on where the day's going to go, which I don't know, right? There's days where I know easily, okay, this thing's going to be bearish, so it's easy for me to qualify all these things. Right now, I just really don't have that clarity. But this is what's happening. So let's say they're going to take it lower on the day, which, again, I'm not arguing that case. I'm just saying, playing devil's advocate here in terms of framing the Judas swing. What this will do here, if it's going to go lower on the day, and this is the Judas swing higher, this here doesn't necessarily change anything, because what this is designed to do is this is a sucker's play, right? So what this will do is this will put retail in short early on this drop here, because they see what? Support, support, support broken. So now they're shorting at 9:30, chasing their breakout strategies, whatever the hell they're doing, and they're trying to go short here. Rips their face off. On the real Judas swing, then it's permitted to trade lower. That's kind of how I look at that information. So it's all about narrative. It's all about how are they going to harm these people? How are they going to put them on the wrong side? So even if they knew to be bearish on the day, right? Well, they got in early and they got their face ripped off. So now what does that matter? Nothing. So when you look at the price swings through narrative, through logic, what it's doing, why it's doing it, it makes a lot of sense. What's going on and why it's happening that way. Samad getting paid. Love to see it, brother. Big year coming, man. Big year coming. I'm excited. And you got to think, brother, man, we've been doing this for years, Samad. So it's, man, about time to shine with the skill set, man. Breakout year. It will fill the opening gap like BB. Oh my gosh, man. You guys are too fun. You guys are going to get me banned here on YouTube. So hopefully you guys enjoyed the stream. I don't know how much longer we'll be here. We're talking math. We're talking bad about the overlords. Man, you guys are funny. You guys give me some good entertainment. It's a lot more fun. Normally, I'd just be doing all this shit on my own here by myself, sorting out price action anyway. So I figured I would come on here live with you guys and hang out here. As you can see how trading below this low, rejecting that low is not what you want to see. If we were going to get down into the sell side here and really start to make a run lower, it would have had to have accelerated below that low here. And then now back to when my bias is wrong, right? Getting back to your question. What's your name? Yeah, Z. Right. Let's say I was bearish here. Okay, but now we have the scalp. You measure it. Well, we just blew through it. So guess what? It's probably not bearish. And I gave you that information here. So you would save the stop. I wouldn't let it come up here and hit my stop loss. I would kill the trade here as soon as I got this feedback that it wasn't rejecting the low and that we overtook this gap here. So that's how you know, like, if your bias is wrong, how you pivot. And if you're short from up here, you don't need to hold on to this loser. Right? You don't need to let it erase all your open profit, right? You take profits on the way down, and then as soon as you get those warning signs and order flow, you just kill the trade. Finisher of faith. Do you ever use deviation levels? Yeah, absolutely. Absolutely, I do. But it's really just like a confirmation tool, right? So I'll show you one way I do it. So opening range gap, measure that. Fib projections. So then what I'll do is I'll look to confirm the fib extensions with something that I'm already looking for, right? So for example, if I'm looking for this high here, right, then I will look to see if there's a convergence of that level, like with either an opening range gap. There's price swings that I measure. There's a lot of different ways to use standard deviations. There's a lot of different ways to attack that. But simply what I'm doing with it is the standard deviations. It's not really like any crazy sauce. I see a lot of people get excited about it, and hey, you know, if it helps you, that's awesome. But at the end of the day, like once you just understand simply like the liquidity, that it's going to reach for this high here, and it's going to reach for this high here, and then it's going to try to get into that gap here. And then if it fails to do it, that's going to give you insight that it's turning and it's bearish, right? So standard deviations are going to be second to that, meaning the standard deviations aren't really the magic bullet. But now if you have standard deviations that are agreeing with other things that you're already looking for, then in my analysis, it makes that drawn liquidity stronger. But in and of itself, standard deviations don't really mean a whole lot, at least personally for my analysis and what it is that I'm doing. But then if I have standard deviations agreeing with a level like this, and institutional order flow is bearish, then it's a loaded deal. So that's how I use that information. Why are you not in buys? It's inside the 1 hour fair value gap, and we have relative equal highs above the target. Let's see what you're referring to. Well, let me stop everything I'm doing and let me get into buys. So I'm not trading at all today. To answer your question, why I'm not in buys, and is this thing bullish? I don't know. I don't know. Looking at this market structure right now, it's trash. Looks trash. Looks ugly in here. Looking at this 1 minute chart here, there's too much back and forth for my liking. So at this point, I wouldn't want to be long. I wouldn't want to be short. If I traded, I'd already be wrapped up on this setup here. If I didn't take this one, then I definitely would have been in on the short and managed it how I would have walked you guys through there. So personally, I wouldn't have any horse in the race at this point. But it does look like, yeah, S&P is strong. So here's what would tell me we're bullish as it relates to your analysis, looking for higher prices. So if we leave the opening range gap here open on S&P and we start to rally higher, that's going to tell me we're going to have a big up day. So then what I would then likely look for would be the highs you're referring to. These relative equal highs appear and see this thing rally. But that's only if they leave this gap open here. You can see NASDAQ came back in, tried to fill the gap. It hit the high of the gap. That's why I told you that'd be a good partial. And then you see it rallied higher. So if we leave the lower half of this gap open, that would be bullish. And then that I could see where I could see your analysis coming to fruition of the highs being engaged, but just tough for me to say right now. But one of the big things I also want you guys to understand is like, why am I not trading Will Dillon? I mean, the setup is so good here, so good here. Why aren't you making some money off it? When you have the skill set to be able to see these price runs happening, you don't really feel impulsive. You don't feel like, oh my God, this is the last trade I'm ever going to see, so I need to get in here and trade when it's decoupled. I'm not really thinking that. Like, I know that PM session, I'll be able to do the same thing, right? Market's going to close tonight, so obviously I can't do it in Asia, but as soon as we open back on Sunday, I can do the same thing in Asia, right? Same thing in London. I don't mess up my sleep schedule, so I don't really do anything in the London session. But I can do the same thing in the pre-market, in the morning, in the lunch hour, and again in the PM session. So I'm not bragging, but it's really highlighting that this is just easy, low threshold shit. Like, this is nothing crazy we did this morning, right? Super simple, easy, obvious draws on liquidity, get in, get paid, don't farm payroll Friday, keep it smooth, right? But when the market's actually moving a lot, man, there is just so much opportunity that I'm not like an emotional, excited beginner trader that like, oh my God, this trade, I have to be in there. Because when you can do this shit on command, you don't really need to get all excited. So that's why I'm not in buys right now or trading these setups here. So hopefully that makes sense. My man Jeff, first fair value gap delivers during opening range again. Have a great weekend, Dylan. Back to work on Monday. Yes, sir. Looking forward to a one-on-one. We'll be in touch, Jeff. And love to see you crushing it, man. Hey, just like we talked about, man, you can see once you have the strategy refined, the trading plan, the psychology, man, look at how fun this shit is, man. How simple it is. Simply waiting for your model. It's fun. You know what you're doing, and you're making bank. Love to see you, Jeff. Back to work on Monday, brother. Enjoy your trip. What's your mentor besides ICT? So I have a lot of people that are influential on me as a developing financial analyst, investor, all that good stuff. So there was a lot of individuals that played an impact and played a role in my development as like a technician, as an analyst, but none more than ICT. Like none more than ICT. He taught me how to read the candles. He opened my eyes up to the markets, and obviously all credits to ICT. Now, before I went to ICT, I already had a decent foundation in terms of understanding how the world worked, how the markets worked, and how, yeah, just basically how the world truly works, not the bullshit they tell you in university and, all that kind of stuff. So I had already had a really good understanding of how the world worked, the level of manipulation, deception. So when I got to ICT, it's like, holy shit, man, this guy's literally explaining how it's rigged. This is fucking awesome, man. I'm in here. Because it's like, I knew it was rigged, right? I knew it was rigged because things that have billions and trillions of dollars wagering on it, it's not going to be left up to chance, right? It's not just going to be random. These people aren't risking billions of dollars on a Sharky pattern or on subjective bullshit fundamentals and stuff like that. They know exactly what they're doing and why they're doing it, like I'm showing you guys here, right? It's very refined, it's very specific, and we know what we're doing. Well, I knew that existed somewhere. But then when this guy's going to sit down and literally explain, I was like, man, I'm all ears. Tuned everything else out, locked in, and that the rest is history. How long have you been trading? Going into my sixth year in the markets here. So, sixth year in the financial trenches. Can you teach how to trade Asia? My Asia model is a good one. My Asia model is a good one. I'm trying to think of how I would explain it, because obviously I have like hour-long lectures that explain how to trade it. So can I explain it in 5 minutes? I don't know. That's kind of what I'm trying to think of how I would attack that. I'll give you something to study. 7 o'clock starts the session, right? So the two times of the day that I'm focused on in Asia is 6:50, 7:10, and 7:50 and 8:10. Those two macro windows. And then the other time outside of that is the opening range from 7 to 7:30. This is all PM Eastern New York local time. That 2-hour window is the sweet spot for Asia session. Now, within that kill zone of 2 hours, there's those macro windows and there's that opening range. Focus on that time. Now, within that time, you're going to look for the same things I do here. So now, each session has different characteristics, and I'll go ahead and give you some sauce here. Asia will generally refer to fair value, very similar to how Monday, because think about what Asia is for the daily range. It's kind of like Monday for the weekly range, right? You know how Monday will accumulate, and then we'll see range expansion later in the week? Well, very similar to how Monday accumulates, the Asian range is kind of like Monday, but for the daily range. Ooh, that's interesting. Okay. So when you understand that, if it's going to consolidate, it's not likely to see big range expansion. Now Asia can expand, of course, especially in this climate, right? But generally, it's not going to. Because again, at the end of the day, it's all about probabilities. It's about how do you put the probabilities in your favor. So what's Asia more likely to do? Now that it's a guarantee every time, but what's it more likely to do? It's more likely to consolidate. If it's more likely to consolidate, it's more likely to refer to its fair value reference points. Fair value is defined by the gap that forms before the Asia session opens. So whether it's a new day or new week opening gap, I'm using that as my draw liquidity. Using that as my draw, I'm using these timing elements I gave you to time my setups into those levels. And that's essentially what I'm doing for Asia. I'm looking for consolidation. I'm looking for false breaks. I'm looking for it to trade back into the range. And usually with the volatility we're seeing now, it's super easy to go in there, get 15, 20, 30 points, get paid, be done for the day. And that's what I do to pad out some of my other accounts. So Simply put, that's what you're doing in Asia, and you want to focus really on those key timing elements. And then if you use the Asia first presented gap, super lethal. And it's the same thing I'm doing here with you guys. So what told me the market was going to be bullish? Well, what's this here? It's your first presented gap. It hits it. It stays in the upper half and it rallies. You see my guys commenting in the YouTube. This is old hat to them. They already know what they're doing because they watch me do this shit every day. So first presented gap, where's the obvious liquidity? Here and here. It drives up into it off that first presented. That's the same thing I'm doing in the PM session. That's the same thing I'm doing in Asia. You just have to understand the different timing elements. And once you understand that, man, there's just so much opportunity available to you. It is ridiculous. So pretty sloppy day here. So that's why I'm not trying to push a whole lot here today. Like I said, they can keep driving this thing higher, but when we got to this point here, I told you guys I really wouldn't want to be long or short. Even if it goes higher, I don't really like to trade high resistance liquidity runs here. So here's what I'm gonna leave you guys off with. If they leave the opening range gap open, that would be bullish. If it's bullish, then this high here has already been taken care of. So now we'd have to have this high here to focus on next. Through that, then we'd have this high here. And if we really start to run higher and they want to ramp up, then they could attack the last high too. But this isn't really like my preferred day of trading. Can I get in here and scalp this? Absolutely. But when it starts to get into this back and forth, overlapping, just nasty price action, I'm personally just not a big fan of trading it. And if you look at the S&P, which I do frequently trade many times, I mean, after this initial run higher, I mean, it really just turned into a turd here. Other than like obviously the scalp I gave you guys here, but get in, get paid. But other than that, it's really been a turd today. So not a whole lot of excitement. That's why I'm not in here pushing it. There's a lot better days for me to trade also. So first presented fair value gap in Asia forms at 6 o'clock. 7 o'clock is the one I'll use, but you're asking very technical questions, sir. So yeah, there's both actually. I just don't want to confuse you. That's why it's like hard for me to point to answer. It's not that I want to hide anything from you or I don't want to give you the sauce. It's just it's very deep, right? It's very deep shit. If you want to do it well, you have to know what the fuck you're doing, and it's deep. It's deep. So I don't want to confuse you, but I also, want to give you the information that you need. So there's both. There's a first presented that happens right after the open, and the first presented that happens after 7 o'clock. So hopefully that's straightforward. I'm more so using whichever one we're in close proximity to. So it's just a matter of, okay, where are we at in the range? What inefficiencies have we created on time? And then I'll use institutional order flow to determine how it's going to use those inefficiencies and what liquidity it's likely to draw to. Just like we did here, right? First presented gap, it hit it. Let's say this is Asia, right? Let's say it's 7 o'clock here. This is 7 o'clock open. Okay, we get a displacement. This is the first presented gap. It drops into it. Does it stay in the upper half? My God, it's going higher. So you can do this really at all times of the day with any first presented gap. And once you understand how many opening ranges there are throughout the day, there's 6 of them. Think of how much opportunity you now have. It literally is like walking on Viagra all the time. That's why this ICT guy is always in a good mood, right? Because a lot of opportunity. Retain, it looks like it wants to go lower. Yeah, that's what these days here would do to you. So these days here, where it's just like choppy, not really wanting to do a whole lot. It's Friday, right? A lot of shit going on worldwide. We saw a huge weekly range already deliver, right? So there's just a lot of factors for why this day is going to likely be more technically not clean, sloppy. So these days here will absolutely make you second guess. They'll make you go long, they'll make you go short, long, short, make you think it's going lower, rip it higher. And it's very tough on days like these, which is why you really want to know what you're doing. Get in, get paid, move to the sidelines, because you don't want to try to be an action hound in something like this. Eslam, I understand that it's related to your private group. I don't want to force you to answer, brother. No problem at all. Man, if you knew what my private group got, trust me, they are absolute monsters. So what I'm giving here is no problem at all. And I'm happy to share it. I'm happy to share with you guys. I want to see you guys crushing it. Ivan, bro, 48 viewers. You're underrated right now. Let's keep it that way. Let's keep it that way. I'm just in my own lane doing my own thing, and I don't need don't need a lot going on. But growing, that'll happen. You just keep doing what you're doing, making bank, showing how it's done. Obviously, it draws a crowd. But I'm enjoying the slow growth. I'm enjoying the slow growth. I don't need to have a bunch of hooligans in my chat distracting me and shit. So I like the way it is. Underrated channel, to be honest. Appreciate you guys. Thank you guys very much. I really appreciate your guys' feedback, and I'm glad it's helpful to you guys. I'm here doing it for you guys. Is this recorded? Thank you. Yes, sir. Yeah. As always, we don't delete anything, so our live recordings, all that stuff, will always be uploaded for you guys to study and review at your convenience. Yeah. Same thing I do with those I work with. Every live session, everything is recorded because there's a lot of things that are being shared. And if you go back through it, come through it, take notes, you'll learn a lot, and you'll become a very good technician. That's what I had to do to learn this. I had to put a lot of time into the charts, a lot of time into studying how these signatures form that create nice price runs. You know, breakaway gaps, right? Things, hint, hint, wink, wink, things you want to start studying, right? At the right time, right? Opening range, macro window. And you put that information together and it gives you beautiful results. Yeah, it'll be in the live section on YouTube. Yes, sir. Thank you so much. All right, guys. So if this one was helpful, be sure to hit the like button on your way out. Let's go ahead and touch on a few other markets here before we get going. Ivan, everyone that asked me about trading, I always refer them to your channel. Appreciate that, Ivan. That really means a lot, brother. Very helpful. Thank you very much, sir. And we'll now have a free beginner course. So for beginners, people that said, hey, you know, man, I see you're doing this trading thing. You know, I kind of want to get into it. Where do I even start? Our free futures beginner course will be a good start. It's going to explain the basics, what the markets even are, what the opportunity is, why trading is the best business in the world. I'm going to do a full TradingView setup guide so you can set up your charts just like I have mine. Tell you guys what strategies not to waste your time with, which ones to focus on. So it's very comprehensive, and it'll really give you guys a good running start as a foundation. Eslam, why'd they move non-farm payroll to next week on Wednesday? Let's take a look at that, sir. Wow. So yeah, they did not have non-farm payroll today. That completely caught me off guard. You know, I this whole time, guys, I'm operating with the assumption that non-farm payroll were released today. What the hell is this amateur hour shit? Okay, it's on Wednesday. I'm sure you know what it has to do with, brother. The government shut down. Did they reopen? You guys, I'm sure you guys are probably much more abreast to that than I am. I know they shut down. Did they get their act together and reopen the government? What's going on with that? That's definitely why, because the government shut down. These economic reports come from government organizations. So if the government shut down, then that'll cause issues with economic data and all that good stuff. So I'm pretty sure that's why. But I didn't even know. I thought NFP came out today. Shit. But it's all right. It doesn't change anything because the market's still doing the same thing. Doesn't change. Liquidity and efficiency and time of day. So yeah, so they moved it to the next one. Yeah, I have no idea. I was following non-farm payroll protocol this week, which obviously, you know, pays me, so I'm not complaining. Yeah, so I have no idea why they moved it. I'm sure it has to do with the government shutdown and whatnot. I know. See you on Monday at 6. Yeah, absolutely. I know. Speak soon, brother. Looking forward to speaking and getting to work, brother. So let's look at SP here. Yeah, so it looks like they're trying to rally this and challenge the high here. So really good point here I want to share with you guys. Even if I suspected this thing was going to be bullish, which we did talk about opening range gap, how it left it open here. And then on the 5-minute chart, how if they did leave that open, that would be really bullish for an up day. And I told you guys this is the liquidity they would likely reach for here. But I want to talk about why this isn't something I would be trading, right? Even though we'll do it. I mean, if you can see it's going to run up to that high, why would you trade that? I don't want to trade shit like this, right? I want to be in trades like this here, where I get in, I go long here, right? I take zero drawdown I take zero heat, and then it just immediately rips to my target a lot. Like, this is what I want to trade here. This here is just a lot of high resistance liquidity run, rally, deep retracement, rally, consolidate, deep retracement, rally, consolidate. I don't really like that because now I got to sit and trade for what? You know, well, a long time for me. I'm ADHD, so I don't like to sit in front of the charts and fuck around with the price action for a long time. I want to get in, I want it to run fast. So even though I can see it's likely to challenge these highs here, this isn't a price run I'm personally interested in trading because of all the sloppy back and forth. So Dylan, what constitutes a trade that you can see but you're not willing to execute on something like this here? So if I was just trading by myself, I still would have traded this because of the things that we talked about. I don't like really how it's delivering. And then you can see same thing with NASDAQ. It's rallying, but would I want to be long this? Hell no. So still same process for next week? No, next week will be business as usual. Yeah, I'll be business as usual next week because even if they're not releasing non-farm payroll in the first week of the month, the first week of the month is still going to exhibit non-farm payroll characteristics. Like Monday, Tuesday, very clean. Wednesday, Thursday gets a little more sloppy. And then obviously Friday's non-farm payroll. So even though, for example, when the government shut down last year at the end of the year, even though NFP wasn't released, NFP week still had the same characteristics that I've trusted for years now. So even though it wasn't released this week, I'm still going to follow NFP protocols. Even if the following month the government still is shut down or whatever's going on, and there is no NFP on Friday, I'm still going to follow the same exact procedures that have gotten me to this point. Because at the end of the day, it's more about routine and consistent execution, right? And that's things I'm going to talk to you guys about in my free course and get into that in free details, and a lot of details, so you guys can have a lot of insight as to how you can start scheduling your routines, becoming disciplined, and really getting good at this, because financial freedom is literally waiting for you guys. It's waiting for you guys to grab it by the throat and rip it. But many of you guys, like I was when I first started, right, are bullshitting around. You're trying to take a lot of trades. You're trying to over leverage your funded account. You're trying to rush through evals thinking something's magically going to change. And I did that, not with evals, with live accounts, but it's the same logic. I was in a rush and I wasn't doing the right things. And I literally delayed financial success for years doing stupid shit. And, you know, you may say, like, Dylan, why are you talking to us like that? This is something that means a lot for me. And I know how much this means for you guys to be able to make money from these markets, to be able to provide better for your family, overcome inflation, all the things that are going on. So I know what this means for you guys. So if I had a friend and he knew that what I was doing wasn't going to give me success, and he didn't try to shake me and wake me the fuck up and tell me, look, you got to do this shit the right way or you're going to fuck around and stay broke. And that's what I needed. I needed someone to tell me that when I first started, because if not, I would have just fucked around for more years and not have been profitable. And eventually, you know, you realize that, okay, there's a right way and a wrong way to do this. And that's my only goal with you guys, to help you guys focus on the right things and do what you need to do to make this life-changing money and acquire this life-changing skill. So on that note, I think we'll close down. So still same process for next week? No. Yeah, I'm not going to be worried about NFP next week. I'll see when it comes out. I'll treat it like a regular high-impact news driver, but NFP week is the first week of the month, and the market, whether it's scheduled or not, will still exhibit those same NFP week kind of characteristics. Will Tuesday be a no trade day since it's non-farm payroll? Let me look at the economic calendar. I'm not sure even what my schedule is for next week. No, I have no problem trading Tuesday. Yeah, Tuesday is high-impact news. Tuesday is no problem. Yeah. Let me see what my schedule is here for the week. See what days I'm trading. Hey John, I wouldn't study the YouTube course. The YouTube course is good, but for compared to what you guys have in my mentorship content, like you guys have over 30 hours of content. This is 3 hours course, so it's a beginner course. What you guys have in mentorship is just light years. Like there's nothing that even compares to it. So I wouldn't worry about it. I'd focus on what you're doing with mentorship, where you're at in the process of that whole routine, and I would just keep the focus there. All right, what's the schedule looking like? Yeah, so I'll be live Tuesday through Thursday. Yeah, that's what I thought. Okay, yeah. So if you guys want to know what days I'll be trading Tuesday through Thursday. But CPS on Friday, I don't really care. So that's what I'll be doing Tuesday through Thursday. So yeah, so that's how I'm managing next week. Ah, Goo, my number one fan. If your free live stream is 49 viewers, I wonder how many you have on paid stream. Maybe 5. Hard day at work, brother. This guy's funny. He's my number one fan. He loves supporting me. All right, guys. So we'll go ahead and close up shop here with the review. I'll share what I'm looking at in the other markets, and of course, we'll get into what I'm looking at here going into the new week on Sunday. So With that being said here, let's go and take a look at the comment. What a rally off the lows with BTC. So they're really punishing the shorts here. All right, so we talked about this weekly fair value gap here. Drew up into that relative equal lows here, smoked those, and really accelerating down through it. So based off how we accelerated through these lows here, looks like they're going to want to run to sell stops here. So that's what I'm looking at on crypto. What will confirm that is looking at the daily chart. We'll have to see if they close with the fair value gap here, but I'm going to watch this up close candle. What you wouldn't want to see it do is kind of like what we were talking about NASDAQ today. You wouldn't want to see it drop below the low, reject, and start to trade higher. I'd want to see it stay heavy below this low. And then that's likely going to take us into the 49K for cryptocurrency. And then for Ethereum, it's weaker because SMT divergence. So if you look at the Bitcoin here, Bitcoin made a higher high, Ethereum didn't, right? So which one's cratering a lot more? Ethereum. So you don't want to hodl, you don't want to diamond hand your way to poverty in something like this, right? And if you look at Ethereum, relative equal lows here, look awful juicy. A lot of sell side liquidity here. So will we get down to below $1,000 a coin? Well, nothing's bullish in this market. I'll say that much, right? So looking at these relative equal lows here, that looks like the draw for cryptocurrency. And yeah, I think that's about it. We talked about in the pre-market, and not the pre-market analysis, in the market analysis tab, called these relative equal lows out to you guys because of how we traded in the gap. Same thing you guys saw me doing on a 1 minute chart today with the NASDAQ. Dropped into the gap, upper half, easy money, higher, right? Same thing here, gap, say lower half, easy money, and the sell side here. So, you know, you're going to see a lot of like headlines, people talking about, you know, what silver's doing, but all those things are just going to talk about price after the fact, right? After it's already happened. Nobody's going to explain their fundamentals and what's going to happen before, right? It's just always reporting on previous day's news, right? And yesterday's headlines don't make any money. So the fundamental shit isn't going to help you because it's just, again, talking about yesterday's news. You need to understand what price is likely going to do. And that's what the technical show you. So we talked about the lower half and how that would give a nice dump into these relative equal lows here. So with that being said, guys, we'll close up shop here. Let's look at the indices here. So hopefully you guys were able to take away the main point from today, which is when I don't have a clear daily bias, look at how the market delivers. You see there's days when daily charts going here, obvious equal highs, equal lows, this is where it's going, boom, it's a done deal, it's obvious. When it's not obvious, look at how price delivers. So would you want to be long, you know, into this high here? I don't know, I wouldn't, right? Because of how it's likely to deliver there. So with that being said, guys, hope you guys stayed safe, hope you guys took something away from this one here. And as usual, we will be back at it on Sunday for the weekly outlook. Yeah, this weekend is it? Yeah, it's the next one. Okay, yeah, so yeah, we'll be live on Sunday for business as usual. With that being said, guys, free course will be out this evening. I'll give you guys a specific time in the Discord. Appreciate you guys joining me here on this Friday, and I will see you guys on the next one. Take care, everyone. Maddie, yes, sir. Pleasure, brother. Bye, guys.